Hello again, welcome to the Alpha Wave Trader Week Ahead. Today I'm just going to quickly focus on WTI crude because I think it is setting itself up quite nicely for potentially a bit more downside. There's a couple of dominoes lined up beneath the market, and I now have the weekly and monthly sell pivots on our side pointing down. So I just wanted to point out the structures to you so you can get a sense, and this is a great little case study for us to follow. Even if it doesn't work out, it'll show you how quickly we can know when we're wrong by using this method. Now, this is WTI crude since 2011, so from the highs above $100 bucks, you can see we've had an absolute carnage in the price all the way down to 25 bucks, and I just want you to note the retracement in prices going all the way back to the midpoint. So this is the point of control, as I call it, the midpoint where a lot of the positions are in the market. It's like a gravitational point where the market will often head back to before deciding on where it wants to go next. And if we just keep our focus on the big structures, you'll know that I focus on the sell zones and the buy zones. So the buy zone being that 12.5% to 25% zone. And after we've had that huge wave down, we've seen a move back to the point of control, and then we've seen a sell-off, and which you'll notice has gone right into the middle of that buy zone of the whole wave, and we've seen buying pressure out of there, which is headed back, very close again to that point of control, which is the midpoint of really all that trading for many years, and that's around that sort of $70 region. So no wonder oil prices are constantly gravitating back to that point. But what I want you to notice is if we're looking at this selling pressure, and that we're seeing a continuation of that selling pressure since a few months ago, when we went and retested around that $68 level, you can see we've got a monthly sell pivot, big monthly sell pivot there. So that is when prices close below the low of the highest price candle in the move. So if we just analyze the way it rallied for these few months, which was ultimately a corrective rally, you can see it created a new high there, closed higher again, closed higher again, and then we had the big sell-off which closed below that low of the highest price candle in the move. So the monthly is telling us down at the moment, and if we zero in on the shorter term, and this is where it gets interesting, where we've got this wave, and if we look at the buy and sell zones and point of control of that wave, you can see we have the sell zone there, and that's the blue shaded area, and the buy zone, and the point of control comes in at $60, and this is what I was talking about the last time I spoke about oil, was we had the rally which nearly got to the sell zone, very close, got rejected, and I actually called it as a sell up around that area when we had the weekly sell pivot. Then we had the sell off straight back to the buy zone, look at that exactly, and then back to the point of control. So we've had a retest of the point of control of that wave, and also, which is most interesting, is after you get, let's say, a monthly sell pivot, you often get the price action which goes to retest up into the guts of that sell pivot candle, and that can often give you the best opportunities. So if it then turns back down from that area, that's when you can start making predictions on a real cascading effect, that if that low is taken out around 52, that can be a domino effect into that low, and then you're looking at potentially really selling off. So the setup now is quite interesting, and if we just zero in on the weekly chart, so here is the weekly chart of WTI crude, and just to recap, what we were looking at, this is that rally to near the sell zone. Here's the weekly sell pivot. There's the attempted rally up into the sell pivot, and that's when I released a video giving targets to $53. We then had the sharp sell-off, which hit the buy zone exactly, and then we've had the retracement to the point of control of that wave, so $60 being the midpoint of this whole wave down. And now that we've had that retest, we've had a second weekly sell pivot. So here's the first weekly sell pivot from that reaction, sell off, reaction again, and there's another weekly sell pivot. So until we see a weekly buy pivot, and that would be, on a weekly close above that $60 area, I have to be on a pretty bearish footing for oil. And you'll see that we've had an attempted rally already up into the guts of that weekly sell pivot candle, and that may still carry on for a bit longer before going. But we now have some pretty clear lines in the sand that I see a weekly close above there. So we do get some news, possibly something to do with Iran or whatever, and it closes above there. Well, it changes the picture, and then you've got to let it do whatever it needs to do. But until then, a lot of the ducks are lined up now, and anything can happen from here, even just a straight move down, now that we have that second weekly sell pivot in place. So I'm pretty much on a war footing on this, and now that we know so quickly that we're wrong, your risk reward on anything is pretty good. It's pretty tight. Obviously you'd want it as close as possible to the area where you're wrong. You'd want to be entering any trades that you might do, and this is not trading advice, this is just to give you a case study in watching these things. So the higher was to go on that weekly sell pivot candle, the better, but you may not get that chance now that it has actually had a slight retest in the guts there. So from here, it really is watching that low of the weekly sell pivot candle. Initially it can hit there and then still have a bit of a reaction before going, but also it can just go, and then you have that domino effect lined up beneath the market, where there'll be stoppies beneath that low, and there'll be lots of stoppies below the lows around $42. So if we were to make some sort of prediction of how it could look, it would be something like that. And there can be lots of ways that you can take advantage of that, of course, whether it's lowering risk in oil stocks that you may hold and be potentially worried about, or so often the way I'd like to play it would be looking at the put options, and if I see that low there as a high volatility point, sorry, that was a nice arrow, that's where I'd sort of look to buy strikes on my puts, looking for a move back to that level at least, and potentially from there it can blast higher or lower. So I'd be wanting to create a straddle around that point. So if I was to buy a couple of $52 puts, for example, I'd sell one if it actually got there and buy a call, so that I could have a straddle from that point. And hopefully all you get is a lot of volatility. Your expectations are that the prices would really collapse, but also prices could just as easily go down and find support in that buy zone of this whole wave and shoot higher again. if we get some news, and then it could oscillate and start looking like it's creating a long-term trading range. So it's not about knowing what's coming next, just about where the major pain points are, and what the highest probability outcome is, and trying to get yourself into a lower risk position, which is what a straddle would be, where you can make money whether the market rises or falls from that point. And so that's one sort of way of looking at it. But anyway, keep your eye on oil. It is looking a bit shaky as far as I'm concerned. All right, I'll come back with more next week. Cheers.